The fear of investing. If you try to invest, or if you already invested, you know exactly what I'm talking about. It's that little fear, those little chills that you get before doing your first investment, before pressing that button. So how do we get past that fear? How do we go through that emotional aspect of investing and actually start investing? Because once you start investing, then it's all downhill and it's all okay. But the first investment, that's really complicated. You start thinking about a lot of stuff, and in this video we will see what we usually think about and how to overcome those thoughts. Hey, it's Dario and this is Divity Finance, a platform where we can share our best tips and tools when it comes to trading, investing, or finance in general. And if you love the subject, please consider subscribing. So maybe you're just starting to invest, you have never invested in your life and you're starting to approach to these new investment things. Maybe you have your portfolio done by a financial advisor, by an independent financial advisor, hopefully, but you still cannot press that button. You still wonder, what if the market goes down? What if I lose money? What if my investment that I decided to do is not the right investment for me? What if the financial advisor made a mistake? What if I am going to make a mistake? How do I have the assurance that what I'm doing is the right thing to do? Well, all those questions, all those thoughts are normal and everybody has them, okay? Everybody has those thoughts when they start investing. So let's see these thoughts, let's process them, and let's see how to get through this in 5 steps that I'm going to show you in this video. And stay tuned till the end, because at the end of the video I'm going to give you a 6th bonus tip. So the first thing, the obvious thing, is education. If you're scared about making an investment, it's probably because you don't know what investing actually means. You don't know why you're investing. You don't know the instruments in which you want to invest. You don't know exactly what does it mean to lose money in the market. You don't understand what is volatility. You don't understand the risks. All those things fall into the category of education. And you need education to go through, to give you an answer to all these questions, and then give you the confidence to start investing. There are many ways to educate yourself. The fastest and easiest way is to ask your financial advisor. If you ask a financial advisor to make a portfolio for you, just ask them all the questions. What is this instrument? What are the risks of this instrument? What is the volatility? What does it mean, volatility? Where I'm investing? All these questions are questions that you should ask to your financial advisor, and he should be able to give you an answer. If he doesn't want to give you an answer, if he doesn't want to follow you in this procedure, which is crucial and fundamental in investing, then it's probably not a good financial advisor. Financial advisor, let's remember it, it's not only someone that gives you the portfolio that you ask for, it's someone that puts you through the investment path, it puts you through the whole investment experience. Then, if you don't want a financial advisor, if you don't have a financial advisor, let's stick with books, okay? Books are pretty easy to find. There are many books about investment, and all books are pretty much okay. There are books that are better, there are books that are a little bit less better, there are books that are more in focus on one thing specifically, but in general, books are very, very good instruments to help you understand what investments are, how to invest, and the risks of investment. So yes, education in general. You could also go online. Online is a very good platform to use. This channel also helps you through this. We have talked about many things. We have talked about ETFs, indices, risks, volatility, diversification, many things, how the money works, how the bank system works, what is inflation, what is deflation, all those things, we talked about them. You just go through the YouTube videos, and I'm not the only one. There are many other YouTubers out there, there are many other bloggers. You just have to read and you just have to watch. And that's it. Second problem is the feeling that at this moment is not the right moment to invest. Now, to get through this thought, it's a little bit more difficult than education. Education can get you until a certain point. After that point, you need to interiorize, you need to understand that the future cannot be predicted. And yes, I know it's easy to say, okay, the future cannot be predicted. Thank you, Dario. Do you want to tell me something more obvious? Well, it's easy to understand in a practical way. I understand it, the future cannot be predicted, but not many people have the ability to actually interiorize it and understand it. Many people try to predict the future, You see in articles, there are many articles that say next year it's going to be a recession, but nobody knows when there is going to be a recession. It's useless to find excuses not to invest because something might happen. Because that thing, you don't know if it's going to happen. So this moment, the present, is the only moment that you can actually invest. So you should not wait for a better future because you only risk for a worse future than today. So remember, the best time to invest was yesterday, the second best time is today, the future, we cannot predict it, so it really doesn't exist until it becomes present. So let's stick to the present, let's invest in the present, and let's not hope for a better future than today, because we only risk to have a worse future. The third feeling is the fact that the investment is not for us. So the investment is not right for us. For example, we went to a financial advisor, he gave us a portfolio, but we are not sure that that portfolio is right for us, or the technique of investment is not right for us. Let's remember, investments are something very, very, very personal. Every type of person has a different approach to risk, and therefore every type of person has different needs also, and so every person has a different portfolio, has a different style of investing, has a different need. Therefore, it's okay to ask yourself if the investment that you're about to make is actually right for you. The only way to get through this is to actually reconsider your investment. So go back to your financial advisor and check the portfolio again with him or her, and check the portfolio again, or check it by yourself. If you made a portfolio by yourself, just check it again. Make sure that your instruments that you're using can actually meet your goals and needs. So there is nothing wrong in rechecking your decisions. Still, if you have difficulties, go back to the education tip and educate yourself on the instruments, because maybe you don't fully understand if the instrument is right for you because you don't understand the instrument. So you have to go back to the education point. So just recheck, reconsider your investment. There is nothing wrong. We don't have to rush it. I told you not to wait for the future, but this doesn't mean that you need to hurry up. Just keep it calm. Go through the investment. There is no rush in investing. Just don't take several years for that. A fourth problem is the amount of money that you're about to invest. When you invest, there is no need to invest everything you have at once. Okay? If you have $10,000 to invest, there's no need to invest $10,000 now. You can wait. Let's just invest $1,000. Let's just invest $500. Let's see how it works. Let's see how I feel in this. And then when I'm sure about what I'm doing, let's invest the rest 9,000, 900, and 500. There is no need to rush it. There is no need to invest everything at once. Just wait a little bit. Just try to invest. If you want to try to buy an ETF, there is no need to put 10 grand in that. Just put $500 and you will see how it works, how the broker works, how the feeling is in investing, how the feeling is to put your money at risk. That's it. Just don't invest everything at once. There is no need for that. Just invest a little bit in the beginning, and then there is always time to put more money. No one is rushing you, and no one is saying, no, you already invested, you cannot invest anymore. That doesn't work, that doesn't exist, so just take your time. A fifth tip is to think about the long term. We are investors, we think about the long term, we don't think about the short term. That means stop reading articles on the CNBC 24/7. There is no need to read those articles to actually make decisions on your investments, which are long-term. I don't care if the CNBC thinks that the market may drop 5% tomorrow because of some weird news. First of all, they think that it's going to drop 5%. I don't know it because the future is not predictable. Second of all, I don't care. I'm investing for 10, 20, 30 years. I don't care what the market's going to do in 5 years or in 3 years or tomorrow. So let's just forget CNBC for a little bit, let's focus on the long term. Also, as I said before, newspapers will always find a reason for a next recession. Having the headline, recession is coming next year, it's a good headline. It gives a lot of clicks to the newspapers. And we saw that in 2011, we saw that in 2012, we saw that in 2013, 2014, 2015, and so on and so on. So there is no need to read those newspapers because it's always the same thing, okay? Just read them if you want to read them, of course, if you are interested, but don't make decisions based on them. And then the sixth tip, which is a bonus tip, which it connects to thinking about the long term, is just make a simulation of your portfolio. If you ask a financial advisor, he may already have given you the simulation. He should have given you the simulation, actually. So just look at the simulation. Let's see in 20 years, what is the probable thing that is going to happen? And surprise, surprise, if you look at the major indices, I'm talking about the MSCI World, I'm talking about the Nasdaq, I'm talking about the Russell, I'm talking about the S&P 500. If you look at 20, 30 years investments, if you try to see, okay, from, I don't know, 2000 to 2020, you will see that there is no time period of 20, 30 years where you could have lost money. And that's very reassuring, knowing that in the past, there has not been any chances for a 20-year or 30-year long investment that lost money. Of course, the past doesn't guarantee the future, but do we want to think that the world is going to change so much that a well-diversified investment in 20, 30 years is actually going to be not profitable if in the past it's always been profitable? I don't think so. Let's just watch the simulation and then be reassured by them, because I can pretty much say that you will be reassured as long as the investment is well diversified. I hope that this video helped you a little bit going through this investment fear. I had this fear, okay, I think everyone had this fear, but let me know in the comment, did you have this fear before starting your first investment? Are you now starting to invest and you feel this fear? Let me know down in the comments. I did. I had this fear for a couple of years. I took a couple of years to actually start investing, and I went through it mainly by education. So I did some courses, I read a lot of books, I see a lot of articles online about investment, about the instrument, and then I made my decisions to invest and manage my money. So I also had this fear, and I overcome it by education, by educating myself. So I hope this video helped you. I hope you liked this video, and if so, please give it a like, it helps a lot the channel. And yes, if you haven't done it already, please also subscribe, and I'll see you in the next video.